and welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. It was one monster rally in the markets, a great deal of short covering, and this was almost entirely dictated by the global markets. European markets surged for no apparent reason because the data out of China, if anything, was negative. It was a fall of imports by 14% plus, and even exports falling by about 6% for the month of August. So it wasn't as if any cheerful data from China or elsewhere, but Europe saw a goodish bit of stocks recovery. The Dow futures were in the positive between 200 and 300 points for a better part of the latter half of India's trading day, and all that propelled a minor recovery into a major short covering rally. One doesn't know how long it will hold. Phrases like dead cat bounce were all over the place, but for the moment it was a 400-point rally on the Sensex, a 3.5% jump in the bank Nifty.
Oh, absolutely, Lata, and probably one very welcome relief rally after several extremely painful days for the bulls. We'll talk about what powered today's move. Lots of opinion as always. Let's start with the headlines. Bulls make a comeback on Dalal Street on the back of positive global cues. Benchmark indices rally 1.7%. The Nifty reclaims the 77,000 mark, 7,700 mark intraday, but closes just below that level. The Sensex gains over 400 points. Commodity and bank stocks lead the gains, with the bank Nifty surging 3.5%.
The Midcap index underperforms Bluechips slightly. It gains 0.6%. Logistics stocks like Gati, Snowman Logistics and Patel Integrated rally between 5 and 7%. Tata Elxsi, Praj Industries, NCC are the other big midcap gainers of the day.
JP Power gains 5% and JSW Energy surges 10% after JP Power concludes the sale of two of its hydro power plants to JSW Energy, raising 9,700 crore rupees in the process. JP also enters into an agreement to evaluate the sale of its Bina thermal power plant to JSW Energy.
Lower the cost of capital to boost investment and help unshackle stalled projects. That was the message from India Inc. at a meeting chaired by the Prime Minister Narendra Modi. Finance Minister Arun Jaitley says India's economic fundamentals are strong, and Chief Economic Advisor Arvind Subramanian says India is less vulnerable to the ongoing changes in the Chinese economy. Well, those were some of the headlines that interested the market all of today. Here are some of the experts whose opinions we have lined up for you on the show. Nandita Parker, the managing partner at Karma Capital, joins in with her take on the markets, both near and long term. Also on the show, we have Joe Kaiser, the global CEO of Siemens, who talks about exciting opportunities that India has to offer. And of course, we'll get you a lot of big voices from that big India Inc. meeting with the finance minister.
All right, all that coming up in a bit, but first the market action. After several days of struggle, bulls finally got some respite on Dalal Street today. A relief rally across the globe also helped our markets bounce back. Anuj is now joining in with all the details. Anuj, the billion-dollar question, is this just a dead cat bounce, or is there some evidence that the worst of this fall is over?
Well, whether it's a dead cat bounce or whether it's a bottoming out process for the market, only time will tell. For now, you have to say that it was a bit of a counter-trend rally. The markets were oversold and were ripe for a bit of a bounce back, and that's what you did. Also, keep in mind that the global markets also rallied today. So India was not alone. Chinese market had a big intraday reversal. That had a large part to play in our markets gains as well. And in the second half, European markets were trading with big gains. The Dow futures were trading with 300-point uptick. All of that led to the kind of sentiment that we saw the kind of rally in the second half. But again, one swallow doesn't make a summer. So that's something that we have to keep at the back of our mind. Let's talk about the stocks, because it was a large cap driven day, especially for the banks. Midcaps again underperformed today. So bank stocks did well, private banks in particular. ICICI Bank contributed more than 25% of Nifty's rally, up 5%. Axis Bank 5% as well. And Yes Bank was up about 7%. Even the PSU banks rallied actually. PNB, SBI, Bank of Baroda, all of them up about 3 to 4% in today's trade. Apart from that, some other prominent Nifty winners included stocks like Larsen & Toubro, Tata Motors, BHEL, all up between 2.5 to 5.5%. Commodity stocks did well today, led by Tata Steel. That stock was up about 6%. GAIL was up 7%, and Vedanta was up about 4%. There were only 3 or 4 losers today on the Nifty, so stocks like Hindustan Unilever, Kane and BPCL were on the losing side. And in the mid-cap basket, not too much of outperformance, but there were some stocks that still stood out. JSW Energy was up 10%, NCC was up 7%, and Indiabulls Real Estate was up 5.5%. The next 2 days would be the real test of the trend of this market because, as I said, one swallow doesn't make a summer, and that's something that the bulls would be wary of as we move forward.
Yep, point taken, Anuj. Just note the character of the stocks that did not rise today. They are the ones that have had some year-to-date gains. Witness BPCL, HPCL, ITC, HUL. These are the stocks that actually didn't lose much through the year, which has not been very kind to equities. Those were the stocks where people ignored and took to the other stocks which had been beaten down so considerably. So clearly today the word short covering is writ large in the manner of the rally. We will have to see whether therefore this is followed up with some solid long only buying. Two very important numbers that the markets will react to tomorrow will be the FII buy or sell number and the domestic institutional buy or sell number. If any of them is way too negative, it can still impact the markets negatively. Well, let's get to some market opinion. We had spoken to Nandita Parker, the managing partner at Karma Capital, and she believes that India is in a unique position globally, which in turn throws up a lot of new investment ideas.
I would say domestic demand. Stay focused on that. Look at what's coming down the pike in terms of government spend. Look at what's happening, what will happen in January because of the pay commission, salary increases, now the one pension, one rank scheme, more spending because of that. So I think at this point, India is in a really unique position globally, and I think really we should, take a deep breath and focus on that, because it's something that I haven't seen in the past, 20 years of India really standing out on its own. I think if you look at the anatomy of the fall, I mean, it's largely macro-driven, right? And so there's almost 100% correlation in the stocks. They're all going down altogether. And so this does present a nice buying opportunity. I would say that, in terms of a catalyst, you were earlier alluding to the lack of confidence that people might have in buying. I think that once the Fed meeting is behind us, we will see a little bit more uncertainty out of the way, and that might give the market some succor in terms of where it's headed.
All right, now straight away let's get to the corporate action and the big deal in the power space. Debt-laden Jaiprakash Power has completed the sale of 2 of its prized assets to JSW Energy. Varinder is now joining in with all the details. Varinder, we know that this is a big deal. It's not just the 2 plants. They've also entered into an agreement for a 3rd power plant. What will it mean for JP Power in terms of its debt reduction targets?
So thank you so much. The big news coming during the day where JP Power concluded sale of their 2 hydro units, which is Baspa and Kanjang 2, to JSW Energy for an enterprise value of 9,700 crores. Management of JP Power told CNBC TV 18 first that nearly 8,600 crore of debt will be repaid after this transaction. The second part of the news was that they also signed a non-binding bid for the sale of Bina Thermal Power. The value of that, which is going in the market, is nearly 3,500 crore. But the important point is that the debt will come down by nearly 8,500 crore. Management said that the debt-equity ratio will improve to 1:1.5 for this transaction. But also, this was the cash cow for the company. So we have to see, what happens with the thermal units which are now left over, and only one unit of hydro, which is Vishnu Prayag, which is left over in kind of earnings which come in the next few years. But the important point, as I said, is the debt for JP Power will come down going ahead. They still sit on a debt of over 40,000 crores. That is the point. For JSW Energy, they will be taking additional debt to fund this acquisition. The total debt will be around 15,000 crore. But the good point is that the management told CNBC TV 18 first was that both the assets will be value accretive from the day one, and that might be the reason for the stock to jump up by nearly 10% in the trade today.
Thanks a lot for that, Varinder. And on to some macros. Moody'S and UBS have cut India's and the entire Asia-Pac region's growth forecast for the current year and the next. Starting first with Moody'S, the international rating agency believes that weaker demand in China will dampen the overall export outlook for the entire region, creating a ripple effect on growth prospects and hurting the growth for the entire region. And in keeping with their analysis, the ratings agency has cut the growth forecast for both China and India for the current year and the next. The sharpest cut has been for India, with the 2015 growth forecast being cut by 50 basis points to 7%, while 2016's growth forecast has also been revised marginally lower to 7.5%. Giving Moody's company is international brokerage firm UBS, which says that the lower than expected Q1 GDP numbers have thrown up some serious questions of India being able to clock a growth of 7.5%. This despite a sharp fall in global commodity prices, which augurs well for India. The new growth forecast for the current calendar year stands at 7.1%. That will be a cut of 40 basis points from UBS's earlier projection, while growth in 2016 has now been pegged at 7.6%.
All right, on that note, time for a quick break. But coming up, huge relief to IT major Infosys. Will bring you all the details on that very important H-1B visa probe that was underway when we come back.